In this video, we're going to be discussing how I grew my options account over 10% in just under 3 months. So we're going to just be talking about basically what my strategy is and what I've learned along the way and what changes I've sort of made to my strategy along the way, just to be a little bit more confident with what I'm doing and whether I do think this is sustainable over the long term. Hey, what's up guys? Welcome back to the channel. If you are new here, my name is Frank Mularcik and most of my videos are about specific dividend stocks that I'm investing in and, dividend stock analysis, and then just talking about various aspects of investing and financial literacy. But I do also talk about, my portfolios and what I'm doing there. And one of the portfolios I have is where I do some options trading there. Just trying to get acquainted with that. I just started at the beginning of February, so that's what we're going to be talking about in this video, and I hope you guys do enjoy. So this right here is my options account with Robinhood. You can see we're at $5,527 right now, which is up about 0.25% today. And I started this trading in this account on February 1st of this year. So you can see in 3 months we're up about 10.5%. You can see it was right around $5,000 there at the beginning of February, right at the end of January, and now we're at $5,527. And then on the month we're up 3.4%, and on the week we're up about 0.9%. So pretty solid numbers there, and it's definitely interesting and good to see that we're up 10%, but you also want to compare it to the regular market because it would have been a simpler strategy for me to just invest this money into a index fund. So if we look at the S&P 500 index here, they're actually up close to 12%, I think 12.4% over that time, and the total stock market index fund VTI is up let's see here, 11.5%. And then looking at the NASDAQ as well, they have not performed as well. They had this big drop here. So they actually are up about 7% in the past 3 months. So my portfolio here has outperformed the NASDAQ, but has lagged the S&P 500 and total stock market. So we definitely want to look at whether that's sustainable, because I can say probably pretty much for certain that the S&P 500 and the total stock market is not going to return 10% over the next 3 months. It might, but then if we extrapolate that out even further, I can say pretty much with absolute certainty that the S&P 500 and total stock market indexes are not going to return 10% every 3 months for the next few years. That's just not going to happen. It's just not sustainable. So we want to see if maybe this is or isn't sustainable. And then just to give you guys an idea of my basic strategy and what I'm doing, this is just a spreadsheet where I record all my transactions here, and I just kind of hid some of these rows just so it wasn't as big. So if we look here, I'm just basically, the only type of options I've done is selling a cash secured put. So that is basically where you are saying I'm going to buy 100 shares of this stock at a specific price called the strike price. And you're writing a contract saying that you will do that if the stock goes below that strike price. So this most recent option I did was on American Airlines. I just sold it this morning at the $20 strike price, and right now it's trading around $21, I think. So, and it expires on May 7th. So this basically says if American Airlines closes below $20 on May 7th, then I have to buy 100 shares at $20 per share, regardless of the price. And basically, for agreeing to that contract, I got paid $48 for that. And as you can see here, oftentimes I don't let these contracts expire completely. I will just buy them back and realize some of the profits and just get out of the trade and move on to another trade. So you can see here, I've done a lot of trades here with rocket companies and Palantir. I did one recently with AT&T, with Carnival. I've done a couple bit more risky trades with something like NEO or Plug Power, but I'm trying to stay in more solid companies that maybe aren't my favorite companies out there, but I wouldn't mind owning them at all if I was assigned, and I definitely am choosing the strike prices, so I wouldn't mind owning them at those prices. It is a little bit restrictive since my account's only at $5,000. I can't do a cash secured put on Apple, for example, because if the strike price is $20, then the collateral is $2,000. So if I want to do a put on Apple, that would be about a $130 strike price, or somewhere around $100. So I would need somewhere around $10,000 to $13,000 of capital to do that. And I personally don't use any margin, at least at the moment. I may possibly do that a lot further down the line, but I would have to be a lot more comfortable with what I'm doing before I get to that stage. And as you can see from this spreadsheet, if we zoom in a little bit here on the left, most of my options that I'm selling are expiring, probably around 1 to 3 weeks out from when I'm selling the options. So you can see this American Airlines option I did on April 22nd, and it's set to expire on May 7th, so that's about 2.5 weeks. And then this Palantir option, I sold it on April 14th, and it was set to expire about April 23rd, so that's about a week and 2 days. Then this other Palantir option was sold on April 12th, also set to expire April 23rd, so that's about a week and a half. So you can just see most of these are, a week or two. Some of them I will go out a little bit more, but generally I don't like to do that just because, the stock price can go wildly different directions in that time, and that's just what's been working for me so far, so I'm sticking to it. If you do go further out, then you can go at a lower strike price and still get a pretty good premium. But it's all about trade-offs, and this is what has been working for me so far, so that's just what I'm going to continue with at the moment. So I think for me, one of the good things I did when I was starting out with options was to start with some safe stocks just to get the feel of it. So the first put I did was on AT&T, which is a pretty slow-moving stock, which is kind of ironic I'm saying that today as they just announced their earnings this morning, so they're up, I think, like 3 or 4% today, which is kind of funny, but that does not normally happen with them. And then I did one on Carnival Cruise Line. And that's funny, it was actually at the $18 strike price. Man, that must have been a while ago because they have been up around $29, $30 recently, so that's interesting. And then I also did one on Hyliion at the very beginning, and this is one, I think I sold 2 puts. I did one down here as well, but I've stopped doing that for sure because one of the things I realized fairly quickly is that and just talking to other people about it, is that when you have a company that's a little bit smaller like Hyliion, I think their market cap is only around maybe $1 billion. So in that case, the stock price, it just can move a little bit more, and news can make it move more. So you just got to be a little bit more cautious, it seems to me, with the smaller companies. So I try to stick at least $10 billion for the market cap. And some of the companies I'm doing, like AT&T, those are like $200 billion companies. So it really just depends on your situation. But I think as a starting point, greater than 10 billion is probably a good place to start. And then also another thing I've tried to stay away from is just, these hype companies, these meme stocks. Like, for example, let's see, I did do a put on Canopy Growth, which is a CBD company, or a weed company for lack of a better word. But as you can see on this trade, I think I talked about it in one of my last videos, I lost a pretty substantial amount on that trade, so that did not work out, though I could have made a fair bit as well if it did work out. So it's just interesting to look at those as well. Then I've done, like I said, a few on Neo here and Plug Power, another one on Neo. So I mean, those aren't super unstable, but they definitely have been falling a lot recently, and I've only really sold puts on them when they were down like 5-7% on a day, and I could really get kind of further out from the strike. This first Neo put I sold it at the $23 strike price, and it was probably trading around $35, I would guess, when I sold that, or when I opened that position, so it was far below the current price, which, I mean, there's still a risk there, obviously, but it was a bit of a safer trade in that specific stock. So do I think this growth in my account is sustainable? I definitely do think it's sustainable for a number of reasons, and the biggest thing for me, the biggest reason, I guess, and one of the big reasons I do like options, is it's sort of like dividend investing, in the sense that you're constantly realizing some of those gains as just cash back into your investment account. And then you can go and reinvest and deploy that cash elsewhere and put that to work for you. Whereas if you just invest in a company like Amazon, you say you invest $1,000 into Amazon, the stock price is going to go up and down. And over the long term, you're probably going to do really awesome investing in Amazon. But, you're just not, you don't know if you made any money on Amazon really until you go to sell, There's really no way to know that you made a good trade or you made money on Amazon until you sell that stock, if that makes sense. because that's the only time you're really going to realize any of those gains and get them in your hands. And for me, I sort of like getting those gains in my hands and then being able to use that money elsewhere to do something else with. So that's sort of why I like the strategy of options, and specifically with selling options, because you're basically getting paid money to agree to a contract, and then as long as that contract doesn't get exercised, then you keep all that premium and can just do it again. So that's one of the biggest reasons. And another one of the reasons is just because as I've done more and more of this, I've just become more proficient. So if anything, I feel like the next 3 to 6 months might even be even better. Who knows? So I think this is definitely a great thing for people to try out. It's definitely not the easiest. You definitely need to do some research. I know I probably was, I wasn't doing any like hardcore research, but I was learning about it slowly over time for probably about 6 months, before I even started, maybe even longer than 6 months, just watching people's YouTube channels like Dave and Jerry, just seeing what they were doing there, and thought, man, that looks pretty interesting. And then, probably in December and January, I did a little bit more focused research on specific things and asking people questions. But, for a while, I was just kind of absorbing some information and starting to understand the process and how exactly you can make money with it. So that's really important if you do want to get started. It's just to take your time, not try to rush into it. Look at what other people are doing and see if it makes sense, how they're making money there, and if this strategy really makes sense for you. So I hope you guys enjoyed the video. I'll leave some other videos of mine up on the screen if you want to check those out. I really appreciate all you guys watching, and I will see you in the next one.